Welcome again. So, we will discuss the role of professional bodies. This is Chapter 1, Section 4, International Public Sector Accounting Standard, IPSAS B. So, this IPSAS B, ours is called PSASP, Kenya. So, IPSAS B is the independent standard setting board under IFAC. So, it was established in late 90s. Initially, it was the committee, IPSAS committee, and now it is the IPSAS board. So the mission is to strengthen public financial management globally through high quality accounting standards. So the key functions is to develop IPSAS. They use the conceptual framework, read the conceptual framework, and develop IPSAS. Currently, we have over 50 IPSASs, from IPSAS 1, which is presentation of financial statements, to the IPSAS that talks about the natural resources, currently, which is under IPSAS 50. And we expect future updates because of the latest IFRS, including IFRS 18, which has updated the way we present financial statements under IPSAS 1. So standard setting process, there is research and consultation, and then they publish exposure draft, and then they wait for comments. They normally get, and you can go to and Google exposure draft, IPSAS exposure draft, and you will see every IPSAS there is an exposure draft, and you are entitled to give your opinion. Most of the times under the board, we give our opinion on that. And then IPSAS P adapts IFRS to the public sector. We borrow the best practice from the private sector. For example, under IS2 or IPSAS TOLIF inventory, we normally we have prohibited LIFO, last in, first out, because imagine you are a shopkeeper. Will you sell mkate ya jana or the bread that will expire tomorrow first, or you will sell the one that came latest? So the last in, first out is no longer applicable in the public sector too. So example is IFRS 15, revenue from contracts. Then we have updated our revenue IPSAS, the IPSAS 9, revenue from exchange, IPSAS 23, revenue from non-exchange, IPSAS 11, revenue that talks about contract, and now we have replaced with one IPSAS called IPSAS 47 that covers everything to do with revenue. Advocacy and support, it promotes IPSAS adoption worldwide, publish implementation guidelines, and also RPGs, research on public sector financial management. Impact on Kenya, IPSAS P uses IPSAS as a primary reference. Kenya participates in an IPSAS P consultation. Okay, there is this, it gave birth to Public Sector Accounting Standard Board Kenya. So Section 192 and 194 of the PFM Act established under Gazette Notice, and this also PFM Regulations 2014. Then the composition is chair is nominated by the National Treasury, members from Auditor General Office, Control of Budget is passed, and also financial experts. The legal mandate is given under 194. I won't repeat that. Key functions, the standards adoption adopts IPSAS for Kenya, issues local implementation guidance, and sets effective dates. For example, IPSAS requires that we normally apply IPSAS from 1st January, but in Kenya we apply from July because our year starts on July. So you can't apply that applicable IPSAS backwards. You can't go backwards. So since our year starts on July, then we normally apply all our IPSASs from July, even if it is directed by the IPSAS P that we apply from 1st January. Template development, yes. If you go to this Public Sector Accounting Standard Board Kenya, then you will see the templates of various entities. Capacity building, yes. IPSAS P, all PSSP also trains accountants in Kenya in cooperation with the National Treasury and also ISPAC. So monitoring compliance, reviews financial statements, work with the Auditor General on compliance issues, recommends improvement. Localization and flexibility can allow different standards for different entity categories. Example, counties given simpler templates than national ministries. That was when we were applying the cash basis, but currently most of the entities will apply accrual, and therefore our templates will be standardized. So the recent achievement is accrual transition roadmap, which they published for 2024 to 27. They provided asset guidelines, pending bills framework, developed disclosure requirements, and then they also developed guidelines on IPSAS 33, first time adoption of accrual accounting. They have good relationship with the National Treasury, which coordinate together they coordinate on implementation timelines, control of budget, aligns budget reporting requirements. Auditor General ensures standard reporting, and then collaborates with ISPAC on training. PSSP also provides feedback on international standards. So ISPAC, or the Institute of Certified Public Accountants of Kenya, which we are members of, established under Cap 531 of the laws of Kenya, established in 1978. The mandate was to develop and regulate the accountancy profession in Kenya. So the key roles include professional regulation. So everyone registers and they are licensed. They enforce code of conduct. So if a member fraudulently prepares financial statements, ISPAC investigates, suspend the member, recommend prosecution. Participation is standard setting. IPSAS also nominates members to the board. They provide technical input in standards and reviews those exposure draft. Capacity building, they together with the board, they continue professional development. So these CPDs you are normally aware of. Seminars on IPSAS updates, workshop on public sector reporting. Okay. Ethics enforcement, code of ethics based on IFAC standards. So they also enforce ethics. Relevant ethical principles include integrity, objectivity, professional competence, confidentiality, and professional behavior. So far, impact on public sector, most government account hold CPAK qualification, and they provide training which ensures competent financial reporting. So other influential bodies include the IFAC, International Federation of Accountants, Global Organization for Accountancy Provision. ISPAC is a member, sets international standards for auditing ethics. They host IPSAS P. ESAC, which we are a member of, Eastern and Southern Africa Association of Accountants General, regional body for government accountants, facilitate knowledge exchange. Kenya actively participates, and sometimes we host them. And then there's Africa Organization of Supreme Audit Institution, AFROSAI, regional body for audit offices. Kenya Auditor General is a member, and they promote audit standards. Office of the Auditor General, while not a standard setter, influences reporting quality because they give us the feedback. Auditor findings drive improvements, and we work as the National Treasury and the board. They work together as they collaboratively work together. So how these bodies work together? Scenario 1, introduction of a new IPSAS. So when a new IPSAS is introduced, step 1, IPSAS P develops the new standard. For example, this is wrong. I don't think this is correct. It was a natural resource. Here it was natural resource. Okay. And then IPSAS P publishes exposure draft for global comment. PSSP Kenya reviews the draft, consults ISPAC and practitioners. ISPAC gathers input from members working in. Then PSSP submits Kenya comments. IPSAS-P finalizes standard consideration based on the global feedback. And then 7, PSSP adopts a standard for Kenya, sets effective date. Then ISPAC develops training program on new standard. PSSP and ISPAC jointly train government accountants. Then 10, entities implement standard in financial system. Normally we are given 3 years. Normally when a new IPSAS comes, we are given a period of 3. So someone can early adopt. Others, they can wait until it becomes enforced. PSSP monitors implementation and issues additional guidance if needed. So how do they monitor? Through the Auditor General feedback. So that is the end of section 4. In our next section, we will learn more about international public sector accounting standards. Thank you for watching and enjoy